Goyle, they say good energy, Goyle. Yenara Yedia. We're duly excited to be back again on your radio. Sometime in the month of December last year, Masterclass went on a very short break, and I kept getting a lot of phone calls saying, "Have you stopped the show? When are you coming back?" And we said to them, "We've only just taken a very short break." We did that just to make way for the election coverage, and I just want to take the opportunity to say, well done and kudos to the team here at Multimedia. They did a great and wonderful job covering the elections, and kudos also to you, our discerning listeners, and by extension, all Ghanaians. You went out there, you voted, and Ghana was victorious at the end of the day. And so we say here that now that the elections are over, let us return to our various fields of endeavor and continue in our various businesses so that we can continue to make our nation Ghana great and strong. Because in a great nation, we're able to go about our various businesses and flourish and help each other. Today's the 13th day of January 2021. Work and life is sort of returning to normal, if you like. Children are also beginning to return to school. The other day on the news, we were looking at parents trying to get school uniforms for their children. Some companies have returned to work. Some are yet to return. Some never went on break at all. I mean, whichever category you fall into, it's time to start. It's time to reevaluate. It's time to hit the ground running. As I was preparing for the show today, there's a little Southern African proverb that sort of came to my mind, and I thought it would be beautiful to share it with our listeners this afternoon. And it goes like this. Every morning in the Mara, and the Mara represents the jungle, the gazelle wakes up knowing that today it must run faster than the fastest lion, or it will die. Every morning in the Mara, the lion wakes up knowing that today it must run faster than the slowest gazelle, or it will starve to death. Whether you're a lion or you're a gazelle, when the sun comes up, you had better be running. And so, good people, I say here on the show today, the sun is up. By all means, let's get running. From the entire Joy Business team here, it gives us great joy to welcome you to today's edition of Masterclass. My name, as always, is Yaw Barnafo, and I'll be your host for the show today. Sometime during the show, we'll try and get Sarah on the show. Sarah is our producer. She's a bit camera shy and microphone shy as well. But to sort of welcome our listeners back to Masterclass this year and give us an idea of what to look forward to in the year. At some point when Sarah becomes available, we'll bring her here into the studio to have that conversation. Today's conversation will be looking at the general topic on coming back and starting over. And we sort of captioned it the business rebound, the business rebound. So as I was thinking about it, I asked myself, I said, rebound from what exactly? We all know what happened last year. COVID struck. It hit the whole world. There was lockdown. Granted that we still have the virus here with us today, we're looking at last year. We're looking at its effect on various businesses. We're looking at what happened and how business generally went down. I'll be sharing some facts on what happened last year in terms of the business environment so that it sort of sets the precedence to have the conversation on coming back and starting again. So if you like, for those of us who like to write notes, the topic today is the business rebound, the business rebound. Today we're having this conversation with someone I like to refer to as a friend of the show. He's been with us the entire period of last year during the show, shared thoughts with us on various topics. He is an award-winning business advisory consultant with a doctoral specialization in global business leadership. He's also the founding member and executive director of FLF, which is Financial Literacy Africa. Richmond, you're welcome to the show.
Thank you. Thank you, Yaw.
Yeah. It's a brand new year. I mean, last year we saw a downward trend in business. We saw things go down. And like I said, I'll be sharing some tidbits with us in terms of some statistics on what happened in the general business environment. But what were your thoughts generally on what happened last year in the business environment, if you like, very quickly?
Well, thank you and good afternoon to our viewers and listeners. I mean, so much. You just caption it in this managerial term, VUCA. Whatever happened last year. Very volatile, very uncertain, very complex, and very ambiguous. You couldn't explain anything. So many disruptions. But the truth is that some gained, some lost. So you choose to be either on the side of those who are winning or those who are losing. And it's not as if it's a one-time or a one-off thing. It's probably going to be here for some time. I remember in one of the sessions we had last year, we said the statistics show that we are going to probably move away from this challenge and the consequence of this pandemic sometime in maybe 2023. if you check all the emerging economies and the developed economies that are the tiger woods, you will see that now they are in their second waves and lockdowns have begun. It has consequences in terms of supply chain disruptions and a number of things. So this is how I describe it. It's VUCA, basically. And you better either let the
Can you
wave
repeat that acronym for me? It's what? It's volatile,
volatile, uncertain, complex, and ambiguous.
complex, and ambiguous.
Right.
That sort of describes it for you,
It does,
you know.
it does.
So here are a few facts. So in last year, during the COVID period, and this is a research done by the World Bank, together with the Ghana Statistical Service and also the UNDP, on the impact of COVID-19 on Ghana, the business, and the economy. Just a few facts. So COVID-19 last year caused businesses in Ghana to reduce wages by about 770,000 workers. The wages of about 770,000 workers. And that's about 25.7% of Ghana's workforce. The effect of COVID last
Very
year.
significant.
The wages of over 700,000 people were reduced. Another effect of COVID, there were about 42,000 layoffs from businesses, both private and public, due to COVID-19 last year. There were about 244,000 businesses which started adjusting their business model to go more digital and start using platforms like mobile money and internet. You talked about how to position yourself
Right.
and whether to gain from the pandemic
Right.
or to lose from it.
Right.
Businesses had to adjust themselves. And we're saying 244,000 businesses mid-pandemic, mid-problem, mid-complexity began to adjust their business model to more digital solutions such as mobile money and internet sales. Are you one of those businesses? If you didn't, we're saying that it's never too late to start. There were also 131,000 businesses which had challenges accessing financing, and these companies were affected, obviously, because if they can't access financing, depending on what you're doing, if you pre-finance, let's say you are into LPO financing, clearly that's your business. You need liquidity to do that, and if you're unable to access funding, then your business is affected. So there's a few more things that keep going down, but we always say that when things are bad, you pick yourself up and you continue. So here's something that Nelson Mandela said. He says that a winner is a dreamer who never gives up. The conversation today is looking at, we've been through a bad patch, a difficult patch. Things happened. The worst of things happened. There were fatalities. There were losses. There were business losses. There were job losses. Families have been affected. Children are not able to go to school. But we're still here. We survived it. We're here. Are we going to keep folding our hands and throw our hands in the air and say, no, we can't do anything about it? Definitely not. And so as we start this conversation, remember what Nelson Mandela says. He says, a winner. And what are you winning from? You're winning from a bad situation. You're going to keep fighting. You're going to keep pushing ahead to win. So a winner is a dreamer who never gives up. And dreaming is free.
Right.
Richmond, today we're talking about the business rebound. Share some thoughts with us.
Well, so thank you, and I want to be very brief about this. Today, we begin the session on business rebound for 2021, and we are looking at 3 weeks. Today, we are going to be looking at the strategic overview. Next week, we'll look at how to reset and reposition for growth, and then the final week on this topic, we'll look at how to leverage on the VUCA I shared and different market scenarios going into 2021 and the years ahead. Now, to do that strategic overview, one of the things you have to know is that from what we have learned from last year, we've learned that the consequences of this pandemic is going to be with us for some time. And so you have to still ride on the waves of that consequence and make your business rebound. So to begin this year, as you want to rebound, one of the critical things you want to look at as a business is to redefine what disruption is for your business. Because we always say there has been a lot of disruptions, but disruption to company A is different from the disruption to company B. Disruption to the financial services in terms of their business profitability or bottom line is quite different from the telcos. And so you would have to pick up what disruption has been for your business. Define it in terms of what the impact has really been, so that you are clear on what you have to do, what you have to change, what you have to revisit to rebound. The next thing you have to do in the first part of your rebound strategy overview is to also identify the specific vulnerabilities in your system, because then the COVID-19 and its business consequence has shown that there were some sort of vulnerabilities in particular areas of your business. So great. Have you identified, or you are still working with it as it is? You never know how bad it's going to get. So identify the vulnerabilities you have picked from the consequences of this after you have defined what disruption is. And when you are done, this is part one. The next thing you have to now do will be to build these two things at the same time: efficiency and resilience. You must now work towards building efficiency and resilience. Remember, you would have already identified the vulnerabilities in your system. But what exactly must you build efficiency and resilience on? Sometimes you can trade efficiency for resilience because you don't want any loopholes in, maybe say, your operations and things like that. And in your bid to build resilience, you make it cumbersome, you make it bureaucratic, and you lose out on efficiency. So you have to put the two together in your bid to rebound and build back by looking at efficiency at the same time and the same pace. Also look at resilience so that you don't trade any for the other. Now, these are the areas you have to do this kind of rebuilding in terms of rebounding back in your business. One is to build efficiency and resilience in your cash flow. So look at building efficiency and resilience in your cash flow management. You look at building efficiency and resilience in your supply chain. And we have said time and again that the pandemic has disrupted our supply chains. So when you are doing that, you are looking at your probably reinventing your supply chain, relocating, or even diversifying it. The next area you have to build efficiency and resilience is your operations. So we call that operational agility. You must be keeping your eye on how you build efficiency and resilience in your operations, and then your service delivery and your product portfolio management, and ultimately your marketing and sales touch points. So when we talk about building efficiency and resilience, these are the headlines that you must be looking at in terms of building that resilience. And then finally, in this overview, you must now understand your new customer and his or her behavior. Understand your new customer because customer behavior has changed. And so you don't just do a rebounding outside of the understanding of the customer you are setting up and resetting up for. And so when you have defined your disruption, and then you have identified your vulnerabilities, and you have now built resilience and efficiency in the areas I cited, the next thing you have to consider doing is to now begin to do a study on who your new customer is and what is the new behavior of this new customer. What are the new likes of this new customer? What is the pricing mentality of this new customer? What is the service expectations of this new customer? Is it varied from what used to be before the pandemic? And are you ready to pick up on your vulnerabilities to change, to make it now suit that customer? And when you are able to do all these things, then you are willing to do the next thing, which you'll be doing next week, which is called how to reset and reposition for growth. So what do you do about them? How do you position them? And then the last week will be leveraging on the market scenarios. Remember, the scenarios can be varied. So if things are not like this and they continue to be what it is and they don't change the way they are supposed to change, what happens? What is a way out of that market scenario? And even in the state where we are saying there is volatility, there is uncertainty, there is complexity, and there's ambiguity, how do you leverage on them? In the mix of all these, we will show you what to do, and you'll be able to rebound for 2021 if you're already not on your way to coming back and building better. Thank you.
Right. Okay. So those are some wonderful thoughts there. Today we want to be able to engage our listeners a bit early and sort of build together an agenda first for these conversations and also generally what people are going to do in building their businesses going forward. There's another quotation I'd like to share. I'll open the phone lines very early today. But this one is from John Ross. And John says, a successful entrepreneur cannot be afraid of failures or setbacks. An initial setback can be a great opportunity to take a new and more promising approach to any problem to come back stronger than ever. Essentially, it's just talking about coming back stronger, coming back stronger, coming back stronger. Before I go to the phone lines, you were talking about what we're going to be doing in the next few weeks and spending a bit more time on how exactly people are going to do that. But just very briefly, for a business, someone who runs a business which went down and they've given up completely, and they've sort of lost interest completely in what they're doing, or they want to switch industries completely. Apart from making profit, apart from being success, having the joy of success, what would be the motivation for such a person to come back?
Great. So you go back to what we learned last year, and we were saying that one of the critical anchors of your business, we call them strategic focus. You look at your leadership, your management, your planning. You look at the people, which is personnel, staff, learning and development. You look at operations, process, and work. You look at customer satisfaction, sales, and then finances. Do they all meet up at a point where the mission statement of the organization is realized? So the business is done, but what was the business set up for? Was it set up to accomplish one mission? And if the business is down now, do you mind if you want to reinvigorate accomplishing of that vision, or you don't mind? So for that person, take another look at the mission. Even before you started, there was a reason why you started it. And sometimes profitability is good for continuity, but it may not be the only reason why you are in business. And so when you revisit your mission statement and you think it is still worth maybe fighting back, it's still worth reconsidering coming back, it's still worth sacrificing a little bit more and starting all over again, then you do. But when you reconsider and look at your mission statement and you notice that you probably made a mistake, that is where we say that begin to define the disruption and then check what the vulnerabilities were, for which reason you are down, you can't do much about. And when you do that, it will be surprising that probably now you have to change your business concept. You have to change your solution offering. You probably even have to change the business outlook and start all over again, maybe from ground zero. But as long as your mission is in line and you think that the reason for which you started a business is still worth the cost, then pay the price and look at the quote you mentioned. That failure of the business going down probably is another opportunity to start again. It may not be easy, it may not be difficult, it may not be simple, it may be difficult. The things that brought the business down may not just vanish, you may even meet it harder. So you start well with us as we are showing you how to probably rebound so that you don't start again and even collapse even further.
There's something you talked about. They may go through difficulties and all of that. And again, these are real life scenarios because there are people listening and they have real situations.
Right.
So we talk about hypothesis, we talk about hypothetical situations. But what would you say to a business that borrowed money from the bank, that went down? The bank is still going after this person. They honestly do not have any motivation to start again because already they have this problem of going back to settle the monies they borrowed, which, by the way, is increasing by interest. They have to go to the bank to either restructure or to find another way around it. They're already in a pit. Let's talk to people like that this afternoon. What are some of the practical things that they can do?
One, for debt management, if you are being swallowed up by this challenge, there is a good chance now to renegotiate your debts now. If you haven't done that, please get to your bank, be truthful to them, be honest to them, tell them that, look, there is nothing I can really do about this. In fact, the more you let this continue the way it is, the worse it may be for you, the bank. And so, if it's even
somebody
possible,
say, if you sell even me,
you won't get anything. So be that honest, show them the books, open up for them, have a frank conversation, take them even to the site. Let them see how the books are looking like. Let them know your real challenge and let them know you are willing to assist. But for the time being, thankfully, the policies that the central bank brought on board makes it possible for banks to hold on and to even reduce increasing balances and interest so that you can at least take some breath. And then you can now begin conversations on, even from the bank side, that what do they think you can do to take up this debt so that at least that burden can be taken away. Now, for the business again in debt management, just in case there are some still assets available, I think you should be interested in clearing your debt first and foremost. So if it's possible, let the bank take a look at the assets that are standing still. And if it is not difficult to do, probably give them out, let's sell them out. And whatever is outstanding, there can be debt buys, debt purchases and things. We can probably get an investor who may be interested in something you have. It may not be a physical asset. It may even be a paper asset. It may even be an intangible asset. But as long as the idea, the product, the brand image is still there, we can value that and make it something that the bank can maybe sell to another entity who may reinvest and things like that. So for debt management, first and foremost, go back to the bank, open up yourself and the books, let them know the reality, ask for a cessation of the interest payment and do a restructuring. Maybe I can start by the next 2 years. I can give you some post-dated checks. I can let you have access over maybe the ownership of these assets that I have standing. It may even be your personal assets.
I was going to talk about security. If you have securities that guaranteed your facility,
Why not?
the bank is going straight for
Why
it.
not? So that is where we take off the veil and then come to you. But in good faith, let the bank know that this is my state. If it even means that now you have to come into that space and even own that as well, we can have a conversation that in the meantime, maybe between this time and that time, you can even be asking around if you can get anybody who can buy, just to give the bank also some comfort that we have not
You're
lost
making an
it.
effort.
Yes, we have not lost it, but you don't close shop and go and sit somewhere, turn off your phones, and even see the bank as an enemy and all that. And now we can't trace you. When you do that, it keeps reading interest and it's not structured, and it gets worse. Your liabilities keep increasing. So genuinely, if you can approach the bank and have this frank conversation, I'm sure the banks who have made provision for this, the banks know. And so it is not something that is just peculiar to you. They just want to have a handle on that debt structure and know that you have consented to the challenge and you sign something off, and they will appreciate that.
It's very important, the point that you make right now, and I think that for those of our listeners who have joined us this afternoon. By the way, you can also join us on Facebook. We're streaming live on Facebook. It's a very important point. What has created the situation is a common thing that everyone knows about.
Right.
So you don't have to justify or prove to anyone what caused your circumstances, number one. Number two, the finance houses are looking for a show of responsibility. And that's what you're talking about. Show commitment.
Right.
Show that you are responsible. Show
Right.
that you are willing to do something about your debt. And we talk about it because it's a difficult thing to do. The easiest thing to do is to run away and hide.
Right.
But we're saying here on the show that if you run away and you hide, it compounds your problem.
It gets worse.
It fits into VUCA.
It does. It does.
It makes it extremely volatile.
Right.
So we're saying that don't run away, don't hide. Even if you guaranteed your house on the facility, go to the bank. We all know what has happened. It's COVID. Number one. Number two, government has put in place policies to help deal with some of these
Right.
things. Go to them, show that you are committed, write to them if you must. And here I'll say that, Richmond, let's share some thoughts with our listeners very briefly. How do they show commitment? There are formal ways to do it. When we had Richmond Frimpong here on the show talking about tax, we assume that a lot of people know what to do when it comes to a lot of corporate governance issues. But there are people who are running businesses today, and they have no clue about some of the corporate governance things to do. We talked about board membership, for example, earlier on in the year. And people don't even understand that even if you are the owner of a business, there's going to come a time here in this country and across the world where, as the owner of your company, you cannot sit on your board because you don't qualify to sit on your board.
Right.
You may be the biggest shareholder, but you can't sit on your board. We've talked about board membership. We've talked about tax. And there was some information that was shared. People didn't know what to do, how to file tax returns. In that session, we also learned that some of the wealthiest people in the world are people who pay attention to their taxes. So here we're talking about showing commitment to the finance houses and saying, listen, I'm in a fix. What do I do? There are ways to do it. There are laid down corporate governance steps to deal with this. Let's take a few minutes to educate our listeners. Those who know, they know what to do, but there are people who don't know what to do. How do they go about it officially?
Right. So first and foremost, in your bid to now reduce the burden of maybe managing your debt and even winding down nicely so that the consequences don't multiply, go back to governance. If you've probably not even paid very much attention to your board, if there were, you are not a sole proprietorship, I'm assuming. You are limited by shares, and you have maybe one or two people who supposedly are supposed to be board members. Have a board meeting, have a conversation on the business outlook, and take a board decision that based on this and that and that and that, we are taking a decision maybe to wind down, something like that. And let the board make a decision on that, vote on that, pass that, and show up even in board minutes. When you meet the bank and you show something like that, it helps you. From there, you go to the statutories. There are a number of statutories you might still even be owing. You probably never paid any tax. You never paid any SNET for your people. You've never paid any tier 2. You are still running. You've not even accounted for your VAT receipts and things like that. Write to SNET and tell them that, look, because of reasons ABC, add the board minutes to it, show the bank statement to show that this is what is happening, and then let them put a freeze on it so that in your mind, you have closed shop, but in SNET's mind, you have 3 staff that for the last 3 months you haven't paid anything for, and they will hold you responsible for that.
They'll come after you, actually.
Come after you. JRA also, write to them. Show the governance thing I mentioned, the minutes of the board meeting and things like that, and get your external auditor to now do the preparation of the accounts for the year that just ended, so that it can show the losses that you have shown. So it's not losses you are describing. It's not losses that you are saying. It is losses that have been verified and be signed off, even by the board, voted and passed, and with minutes and everything. GRA then can then make some considerations for you. Senate can also make some considerations for you. So you notice that the statutories are held. When you do this at the board level and do the statutories and engage your bank, you will notice that you'll be very comfortable. In fact, even if an investor wants to come in, he will be looking at any of these matters before he takes a decision to invest or otherwise. And then when you are done with this, get to the Registrar General. If you really see that you think that is the end of the business, go through the process of winding down and then be free and know that, look, I've even decided to say quit for this particular enterprise. Or even if not quit, I have decided to give myself some time to come back or to do something new. If you're able to do this basic thing for you who has just maybe 3 people or 4 people under you and your business can't work again, I think it will be so recommendable, it will be so great, and anybody you come into contact with can help you. Even the bank can help you do this when they know that they are working with you into this. And you never know. There may be another time you want to reconstruct or do something else. It is these same people you may have to go back to help you.
Wonderful thoughts there, wonderful thoughts. I was just going to add very quickly that if you've missed this conversation, you're not watching, you can go back and watch it on Facebook. But otherwise, if you require more information, that's what management consultants are there for.
Right.
You know, we always say that if you need help, shout. If you need help, raise up your hand. Richmond is a management consultant.
Right.
There are other management consultants. If you need help on how to handle or do the official thing or the corporate governance thing to find relief in situations like this, we're saying raise up your hand, find a management consultant, and he will walk you through it. And Financial Literacy Africa, you do this, right?
We do.
I was going to do this at the end of the show, but let me do this now. If someone is looking for Financial Literacy Africa, where do they go to? What numbers do they call? Just so that we can tie it to the point that we just made.
First and foremost, I want to tell anyone watching that if you want to be assisted, just go to YouTube now as we are speaking and type Richmond Kwame Frimpong, and immediately you subscribe, we'll reach out to you now.
Right.
Number 2, just WhatsApp this number. Let me give the email first. Send an email of whatever challenge you need to info@flfafrica.org. info@flfafrica.org.
Okay.
And then even go to Facebook and look for financial literacy for coronavirus alleviation. Anything associated with
that's
coronavirus,
specific.
Yes. Financial literacy for coronavirus alleviation, Flickr. Anything business challenges, anything related to business that came out of the pandemic situation, we will be able to reach out to you and help you resolve it.
There you go. You know, it was sitting right next to me, and I didn't even know this. And this is help right here.
Right.
Help is available. Don't sit down and mope and do this alone. I haven't started getting interactive, but let me ask you this one. There's a question. You did not add your name. Okay, this is from Ni Otinkrang. Ni Otinkrang, good afternoon to you. Ni says, yeah, please, what about those owing personal loans where we cannot pay because we were sacked due to COVID?
Right.
What do they do?
That's genuine, and there's a provision for that. Remember, in the budget, the government made some allocation for people like that. So still show the evidence of you being sacked due to COVID to the bank. That is even more verifiable. That is even more easier to deal with, so that they know that indeed because of reason ABC you couldn't do anything. And the government policy makes provision for people like that, so that if they have to freeze and wait for the next employment or employer, they can take it up from there. If you don't do this and share with the bank, then you have yourself to blame.
Right. I'll take this other one, and then we'll take a message from our sponsors, and then we'll get interactive proper. This one is from Ajiman Joseph. Good afternoon, Joseph. It says, good afternoon, boss. Happy New Year to you. Please ask your guest for me that the efficiency and resilience, how does one ensure that love for work will be sustainable? I don't know if it's clear.
So I think he's asking 2 questions in one.
Yes.
Efficiency and resilience from the point of view of the employer, and love for work from the point of view of the employee.
Precisely.
Well, for the employee, sometimes you don't have much options. For example, if what you are doing and you really don't like it, but you also don't have another option to a job that you love, you can't just say, because I don't like the work, I'm going home, and you just resign. It will come back to bite you, particularly in these times. You must develop some love for the work that pays you, at least for now, until you get another alternative. Don't leave camp because you don't love it, but be looking out for one you love, so that you can make yourself happy, because you need to earn some income. The employer who is looking at resilience and efficiency, it's very difficult to have resilience that is efficient at the same time. But now, because we have digitized systems and operational agility, you can actually achieve both. For example, you become more resilient. If you didn't know, you become more resilient today if you had a mobile money payment system where your customers can pay through. You can account for it at the end of every day. So and nobody can take it because you pay it into a mobile money account.
That's correct.
It's resilient and efficient at the same time than to say, let me get a teller in the office who will be taking the money and be counting in the shop. That looks like you have your eyes on the person, but it's not resilient enough. It's not robust enough. He may choose to count and record anything, and you don't have any second proof system. So that is how you build resilience and efficiency.
And efficiency. If you just tuned in, this is Masterclass on the Superstation Joy 99.7. Going cashless has never been this convenient and exciting. Goil's e-payment system is now compatible with G-Link, the national payment platform. Now you can use your G-Link card on Goil POS machines to purchase fuel. GH Link cards offer additional payment options for fuel purchases at Goil stations in addition to the Go card. Every fuel purchased is recorded automatically on your monthly bank statement, helping cardholders track and manage their expenses. So go ahead and use your GH Link card to buy fuel and all lubricants from any of Goil's over 400 stations across Ghana. Go cashless and protect yourself and stick to all the COVID-19 protocols in these times. Goil, they say good energy, Goil, Yenara, Yedia. We're getting interactive straight away. Numbers to call 0302 216 541. That's 0302 216 541. Pick up that phone, give us a call. When you pick up that phone, you give us a call. We'd like to know, how has COVID-19 affected your business and what have you done in trying to get back? Or what questions do you have in getting help to try and get back? We just want to share thoughts. Like we always say, life is too short for all of us to make all the mistakes ourselves. Let's share ideas. That way we help each other and we get there quicker. 0302 216 541. Otherwise, you can also send us your comments on 055 1111 997.
The Masterclass is in session, and you can interact with us via Facebook at Joy Business or at Joy 99.7 FM. And if you tweet, the handle is at Joy 997 FM. Don't forget to hashtag Masterclass. You can also send us a text on 1422 across all networks, or join the WhatsApp conversation on 0244 340437, and our facilitators will address your concerns. Attention everyone, class is in progress.
Welcome back. This is Masterclass. We're interactive now. Numbers to call 0302 216 541. That's 0302 216 541. Pick up that phone, give us a call. We're sharing thoughts on the business rebound. COVID-19 has affected all of us one way or the other. How do we get back? How do we bounce back? How did COVID-19 affect you in 2020? How have you bounced back, or how do you intend to bounce back? Pick up that phone, share your ideas, share your thoughts. Let's all become better for it so that we can build our nation to become great and strong indeed. You can also send us your comments on 055 1111 997. That's 055 1111 997. While we're waiting for the phone lines to ring and the comments to come through, I have a question for you. You know, the very first time you came through early last year, I think it was half year last year, there was something you talked to us about, which was finding value. I'm trying to remember the topic, but it was about finding value in the systems you already have and the setup you already have, and eliminating waste.
Right.
Now, somebody has a company, they shut down, but it's a 100,000 Ghana cedi company because he's had it for 4 years and he's invested so much into it in terms of fixed assets, in terms of, let's say, money in the bank, in terms of value that they've added to the business, equity on the market, but they are in debt. How does a business person maximize their current investment and the value of it thereof to offset their debts or to bounce back?
Well, that is a difficult thing to navigate. However, remember always the business balance sheet. They are physical assets, I always say. And sometimes for those who are just individuals running their own businesses, there is a very little distinction between your assets and that of the business. And when you run into difficulty, for many people who makes the backs of their own accounts and that of the business, then you are running into trouble. But if you were able to separate the two, and there were some things that was in the organization that you ring fence as for the organization, this is the time to keep them in good shape. And if it's possible,
Richmond, hold that thought for me, because we're going into an area where a lot of people do not keep their books properly, and I'm interested in that. But I have a caller on the line. Good afternoon, you're welcome to Masterclass.
Your call has been put on hold.
Okay, we definitely want to hear what you have to say, so please give us a call again so that we can hear your ideas and your thoughts. We're building our nation to make it great and strong. We want to hear your thoughts. How did COVID-19 affect you in 2020? How are you planning to bounce back? What are the steps you have taken? How can we learn from your experience? Or do you have any questions that we can help you answer? Richmond, you were talking about the fact that if you have separated your personal dealings from the company dealings, then yes, you're in a good place to start looking at the value. If you have not, which most of our people find themselves in today. So the easier one is if you have. Let's talk about the if you have.
If you have
then
not,
we come to if you have not.
If you have not, don't hit yourself too hard. Your assets are that of the organization. And so begin to itemize and ring fence the things that are yours. Now, because they are mixed bags, they are also for the organization. But what are you looking out to come out of? You are looking to come out of the quagmire of debt. 100,000 CDs and loan and things like that. Zero, and listen to me carefully, zero is bigger, higher, and better than negative 1 billion.
Please say it again. Say it slowly so that it can sink in.
Zero. Having nothing is better than owing a billion. That is captured in a car that you drive. That is captured in a home that is sitting as a mortgage. That is captured in a consumable that is in the living area, where people will come and clap for you and say it's looking nice, but it's debt you can't pay. If you can pick those items and clear them off to reduce that burden of debt, and you don't owe anything, you are wealthier, you are richer than to owe those things and to probably be struggling to pay them. But people can tell you are still driving a V8.
But let me chip this in. The life on Instagram today and peer pressure won't agree with what you are saying.
Well, but the one who feels it will agree with me that zero, not owing anyone, not owing the bank, and not driving a V8 is better than driving a V8 and not being able to sleep because there's a call on you every 30 minutes to say, when are you bringing the
They will say, Nani Pansu Yedeng. Okay, so let's go to the other part of the conversation. If you have separated your personal dealings from the company, how does that help? Okay, I think I have a caller on the line now. Yes? Okay, not yet. Okay, we definitely want to hear your thoughts. Please pick up that phone. Give us a call, 0302-216-541. That's 0302-216-541. I have something on social media. Follow up of the first question to you, Richmond. It says, can individuals also call Financial Literacy Africa?
Why not? I mean, we can help, and it is not even just a Ghanaian thing. It's in about 48 countries now, and our country heads can help you resolve whatever financial challenge you need. Not in us give you money, but just help you out of any education you may need.
But information is power.
It is.
So it's even more valuable than money because it can help you make money.
Right.
Help you make money. Yes. Okay. We're still waiting for the phone lines to come. I'm able to take a few more calls. So 0302-216-541. We want to hear your comments. We want to hear your thoughts and build the agenda for our conversation going forward into the rest of the year.
So for the one who has separated the books, it's easier for you, the person, because then you even have your end of year financial reports. You have your board reports. Many people don't, but if you have all these things,
minutes of the board meetings,
then I think you don't have a problem at all. You can just talk to your bank. They can help you. Remember that there are a number of relief packages that have come up even post-COVID, even this year. As I'm speaking, Mastercard has about $90 million or CD account that is meant to support businesses like that. And so just seek help, apply for it, and show evidence that you can rebound your business if you get that kind of money, and you can be helped.
You talked about Mastercard. What are some of the other avenues available in terms of relief? I know that COVID has hit the entire world. While Ghana has made provision for its citizens here in Ghana, tax reliefs, delayed payments, support for businesses by the government, relief on taxes and all of that, aid is also coming in the direction of Africa.
It is.
Now, where can some of these things be accessed?
Well, so you can...
And what are they? Just very briefly, so people know.
You can look at some of the development banks in this instance. So for somebody in Ghana, remember, you are not the only one looking for this help. So it's all over the world. But in specific institutions like the African Development Bank, the British Aid, the UK Aid, and things like that. But you need to be guided. Again, you need to be guided because they've done this support in such a way that now they have deposited them in the hands of institutions that are regulated in each of these countries. So you don't have a direct access to request for. So, for example, the Ghana Enterprises Agency and then the MasterCard will give them that funding and say that take responsibility for it. You know how to verify your people. You know how to authenticate the challenges they are citing for which they need the funds. And then when you give it, go back and pull it back in the form of maybe a loan that pays virtually nothing. So it is not just to go directly to them, but to leverage on the different agencies that have been set up in, for example, Ghana. The Ghana Enterprise Agency or the NBSSI, that used to be the case, can help you. And they have branches in over 118 locations across all the regions of the country. And their job is not even to just give you money. They can just come into your office, come into your business, and guide you to say, do this, do that, do that, do that. And the burden of running your business down can be taken away and not even just receive any loan.
Management consulting, I always come back to that because there are people who are trained to hold your hand and help you in times like this.
Right.
Very briefly, before we do the roundup, talk to us about bankruptcy.
Bankruptcy is when you
in times like this, for businesses which have considered it or are thinking about it.
I think many people, particularly for this part of our world, we see bankruptcy as, I don't know, maybe shameful or I don't know what it is. Embarrassing. But in business, there is provision for bankruptcy. In fact, there are a number of people who are individuals in developed economies who themselves file for bankruptcy. And when you file for bankruptcy, it doesn't mean you probably are irresponsible or anything like that, but you are actually being honest with yourself. The only problem is how to prove that you are bankrupt. That is because you don't keep records. Many people cannot prove for us to authenticate and give them maybe the pass that indeed you are bankrupt. But you can file for bankruptcy and we will check if indeed you are bankrupt or not. And that is where the problem is. But you can be guided. Bankruptcy is part of business. There are provisions for same. In a place like Ghana, when 10 businesses start at the end of beginning of every year, you will likely find just 2 surviving at the beginning when we end the year. And so the rest, what happens to them? File for bankruptcy, you can be supported.
Wow, file for bankruptcy, you can be supported, but it has to be legitimate.
It does.
A few things we've talked about here today: preparing our thoughts and our general psyche for the business environment going forward and coming from COVID-19. What are some of in about 30 seconds, what's the takeout for today's conversation? So I know that next week we will again be discussing issues of preparing generally as we go forward and as we launch forward. But what's the takeout from today's conversation?
So today we are beginning the conversation about business rebound in 2021. We have had a strategic overview. Next week we are looking at resetting and repositioning for growth. And then the week after we are leveraging on VUCA, which I explained. But we are saying even before that, define your disruption. What is it that has gone bad for you? Be clear about it. Number 2, take out and identify the vulnerabilities in the system that brought you to where you were when the pandemic happened. You can't just gloss over it. There was something that was a gap that brought you down when the pandemic came. Identify it so that you don't repeat that error. The next thing is to build resilience and efficiency at the same time. And we told you the areas you should do that: your cash flow, your supply chain, your operations, your service delivery, and your product portfolio. In these areas, we are going to be showing you how to build efficiency and resilience.
Right.
And then lastly, we said understand your new customer. Customer services, customer expectations, customer outlook has changed
completely
because of COVID. If you don't and you go into this rebound with the same mindset of who a customer is, you'll be surprised.
Next week and the weeks after that, we will spend more time talking about this. This has been Masterclass here on your Superstation Joy 99.7. And we're spending time here introducing the conversation going into this year about the business rebound with a friend of the show, Richmond Frimpong. We're back on your radio same time next week. Do make a date. My name, as always, is Yaw Anim Barnafo. Up next, we continue with The Ignition with Sammy Forson. Thank you for listening and see you same time next week.